While ordinary investors panic about the coming 2026 financial reset, the wealthiest investors in America are positioning themselves to generate cash flow no matter what happens next, and their secret is not gambling on risky meme stocks or predicting the next crypto explosion. Instead, they are quietly using a disciplined, three-step passive income system built around asset intelligence and covered calls. This strategy transforms ordinary stocks into monthly cash flow machines that can pay investors over and over again. And during periods of economic uncertainty, cash flow becomes more powerful than speculation, because when markets crash, dividends and option premiums can still continue flowing into your account. The first step used by elite investors is something called asset intelligence. Asset intelligence simply means identifying companies that produce durable, long-term cash generation. The wealthy focus on businesses that dominate their industries, even during recessions. Think about companies with strong balance sheets, global demand, and consistent profits. These are the kinds of assets institutions accumulate quietly, while retail investors chase headlines. The goal is simple: own assets that survive economic storms and continue producing income. Once the right assets are selected, the second step begins. This is where covered calls enter the picture. Covered calls allow investors to collect option premiums from stocks they already own. In simple terms, investors get paid for temporarily agreeing to sell shares at a higher future price. This creates a second layer of income on top of normal stock ownership. And this is exactly why institutional investors love the strategy during uncertain markets. Instead of waiting for stocks to rise, the portfolio begins generating income immediately. That means investors can potentially earn money even when markets move sideways. The third step is where the compounding effect becomes truly powerful. Elite investors continuously recycle their covered call income back into additional assets. This creates a self-feeding machine that gradually expands monthly income over time. The rich understand that long-term wealth is built from controlled systems, not emotional decisions. And in the coming 2026 reset, disciplined cash flow strategies may become the ultimate survival advantage. Right now, millions of investors are still trapped in the outdated mindset of buying stocks and simply hoping prices go higher. But the elite approach the market very differently. They treat stocks like productive business assets designed to generate recurring income. That is the psychological shift that separates speculators from strategic wealth builders. And this mindset becomes even more important during economic resets, because uncertainty creates fear, and fear creates opportunity for disciplined investors. Covered calls are especially powerful because they introduce consistency into unpredictable markets. Even small monthly option premiums can compound dramatically over several years. That is why institutional portfolios often prioritize steady income generation over flashy short-term gains. The wealthy know that surviving downturns is often more important than chasing explosive upside. And this is where risk management becomes the hidden weapon of elite investors. They focus on controlling downside exposure while maximizing cash generation. This creates emotional stability during periods when average investors panic and sell. The reality is that most fortunes are built during periods of uncertainty, not optimism, and the investors who generate reliable income are often the ones who survive long enough to dominate the recovery. Now here is something most beginner investors never realize about covered calls. The strategy works best when paired with high-quality assets that institutions already trust. That means investors should focus on durable sectors with long-term economic importance. The goal is not fast money. The goal is building an income-producing machine that survives economic cycles for decades. That is exactly how many elite investors quietly build financial freedom behind the scenes. While headlines distract the public, disciplined investors continue collecting cash flow every single month, and over time, that steady income can snowball into extraordinary wealth, especially during economic resets when undervalued opportunities begin appearing everywhere. The question is not whether the financial system will change in 2026, but whether investors are positioned to benefit from the transition, because history shows that every major economic transition creates a completely new class of winners, and those winners are usually the investors who stay disciplined, while everyone else reacts emotionally. The wealthy rarely chase hype, because hype is unpredictable. Instead, they build systems designed to generate predictable cash flow under pressure. That is exactly why covered calls have remained popular among sophisticated investors for decades. The strategy is built around probability, patience, and recurring premium collection, and when combined with strong assets, the results can become extremely powerful over time. Imagine owning productive companies while also collecting recurring income every single month. That is how the wealthy create portfolios that behave more like income-producing businesses, and in periods of inflation and instability, cash-producing assets become increasingly valuable. Now, let's talk about the biggest mistake average investors make during financial resets. Most people focus entirely on price movement instead of income generation. But price movement alone does not create financial resilience. Cash flow creates resilience because it gives investors flexibility during uncertainty. That flexibility allows disciplined investors to capitalize on opportunities when markets fall, and that is often where the largest long-term gains are quietly created. The elite understand that downturns are temporary, but strong assets can survive for generations. That is why patience becomes a financial superpower during market chaos. Covered call investors are not relying on perfect predictions. They are relying on disciplined systems that generate recurring income, regardless of short-term market noise. This is why some investors continue collecting income while others freeze during volatility. The wealthy prepare before crises arrive, not after fear spreads across the market. And right now, many elite investors are already positioning themselves for the next economic cycle, because the greatest opportunities usually appear when confidence disappears, and those who master cash flow investing today may hold a major advantage during the 2026 reset tomorrow. Now, here is where the strategy becomes even more interesting for long-term investors. Covered calls can potentially reduce emotional decision-making because the portfolio is actively generating income. That recurring cash flow creates a psychological advantage during volatile markets, because investors who receive income are often less likely to panic during temporary downturns. And emotional control is one of the most valuable assets in all of investing. The financial elite understand that protecting capital is the foundation of building lasting wealth. That is why sophisticated investors rarely rely on a single source of returns. They combine dividends, covered calls, strategic asset selection, and disciplined reinvestment. Together, those systems can create powerful, long-term financial momentum. And momentum is often what separates ordinary portfolios from generational wealth. Most people underestimate how powerful, small, consistent income streams can become over 20 years. But the wealthy think in decades, not weeks. That long-term perspective allows them to remain calm when markets become unstable. And calm investors are often the ones who recognize opportunities before the crowd does. This is why financial education may become one of the most important assets of the next decade, because investors who understand cash flow strategies operate under a completely different mindset. They stop asking how fast they can get rich and start asking how stable their income systems are. That shift alone can completely transform an investor's financial future, especially in an era where economic uncertainty may become the new normal. The investors who adapt early are often the ones who gain the biggest advantage late. And right now, elite investors are quietly adapting their strategies for a changing financial world, not through panic, but through preparation, through gambling, but through disciplined systems built around cash generation. And those systems may become increasingly valuable as the 2026 reset approaches, because in the end, the investors who control cash flow are often the ones who control their financial future. This content is for educational purposes only. It is not professional financial advice. Investing involves risk. Always do your own research.